morning and welcome to GrainTV. My name is Cody. This is Brock Shimano. Today's August 23rd, an export sales report day. Let's get right into the market and see where we're trading this morning. Corn seems to be trading off just slightly, more of a pause than a real sell-off. Soybeans is about unchanged, up slightly, and wheat is also up just a bit, with Kansas City trading up 4 this morning. Export sales came out, but it seems like the trade is focused very much on the crop tour, going across the Midwest through key growing areas, pulling ears of corn, making yield forecasts. Brock, we know that the first day of the crop tour added a significant amount of surprise. Now, what did we see in the third day? Was there any surprise there? What stood out?
Well, the only state that they really reported on with their final results was Illinois. They came out with a projected yield of 121.6. That's slightly above where the USDA is actually projecting Illinois right now. The USDA had them at 116. So that's a significant deviation of what the USDA has. That's something we're going to have to pay attention to as we move forward and get more yield adjustments by the USDA. So I think that's the big number to focus on out of yesterday's information. Later on, tomorrow, we're actually going to get the final yield results about 2 o'clock Central Time, so that's something we're going to have to pay attention to on Sunday night when the market's open.
That's pretty interesting. See, Illinois, much like Indiana in day 2, came out above what the current USDA forecast is. I think that's kind of interesting. I mean, Indiana, Illinois hit hardest by the drought, and yet pro farmers pulling yields that on average seem to be above the what the USDA has kind of written off. So, I mean, do you think that that is going to affect the trade this morning at all?
You know, I think it is putting a little bit of pressure on the corn market right now. Corn is trading off about 4 or 5 cents. But I think the thing to take away from that is that they actually hit the northern parts of those states. The southern parts of those states are the parts that were actually hit quite a bit worse than what the northern parts were. So I think you know, we could see those numbers actually reduced a little bit by the USDA. But I think right now the market does have to trade what numbers are being presented. That
sounds fair enough. Let's get into the export sales report this morning. With that being behind us, we had sales that met expectations. Corn came in for 108,000 in the old crop, beans 132,000 in the old crop, and wheat 468 in the old crop. Beans actually seemed to beat analyst expectations, but that was largely a part of the 585,000 metric tons that were sold in the new crop. Let's take a look. We're on week 50, which means we're approaching the very end of the 2011-12 marketing year, and right now corn is behind pace 25 million bushels to meet forecast. We have 2 more weeks for them to pick it up, or the USDA is most likely going to have to revise their export sales forecast for the old crop down again. And so let's take a look at beans here. Completely different story. We're ahead of pace 39 million bushels, you know, as a result of that bar right there. Bottom line here is that I would expect the USDA to have to revise their bean sales higher, much like they did in the August report, in the upcoming September report. If you look at the sales progress for new crop, here's what's kind of interesting. You look at the sales in the blue. The blue right here is new crop sales, and so we're trading. We've made about 56% of sales already. That's well ahead of what we typically see. That's great to see in beans, of course, but the story is slightly different in corn. You know, we're kind of right around what we typically would see in terms of commitments for the new crop sales. So that's good to see. I think beans is running pretty hot right now. It's going to be interesting to see if it has legs to continue higher and whether or not we see any sort of price rationing for that new crop bean contract. Brock, this is one aspect of demand. In the last August WASDE report, we did see demand focused on significantly. They slashed demand across the board. Are we seeing that sort of demand cut in the ethanol sector?
You know, we did see demand get cut quite a bit in that USDA WASDE report last month, or excuse me, at the beginning of this month. But we have seen upticks 4 straight weeks in the ethanol production and use of corn. Last week we saw another uptick about 0.5% on barrels produced per day. We're sitting at about 123,000 per day. But keep in mind where we were last year, we're about 9% below where we were last year. Stocks also increased this week by about 0.25%. but we're only about 1.37% above where we were last year at this time. I think what we do need to focus on, though, is how much corn is actually being used for ethanol production. We used about 87 million bushels last week, which is quite a bit below what we need to be using to actually meet the USDA projections. We need to be using about 115 million bushels a week to meet those projections. The thing to keep in mind is that we've only used 4.79 billion bushels of corn for ethanol so far this year. The USDA has us pegged at about 5 billion on their estimates. So 2 weeks left in the marketing year, 2 weeks left to get caught up to that 5 billion bushels. I don't think we're going to make it, so I do think we're going to see more revisions lower in corn used for ethanol in the September USDA report.
That sounds fair enough. Thanks a lot for tuning in. Follow us on Twitter, follow us on Facebook. We'll see you Friday for the weekly wrap-up.